So
We'll give it a
welcome,
best shot.
Rob Lees from Mortgage Choice. We're chatting a bit. We've had a big show today, all about the business awards and small businesses. So you thought we'd have a good chat about a problem that many businesses struggle with, which is understanding and overcoming problems with cash flow.
That's right.
So what is cash flow, and why do they struggle?
And I thought I'd talk about this. I found this was when I was doing the TAFE course, when we had the combined TAFE course with the Business Chamber and TAFE. This was the biggest issue, really. And it was actually very helpful to talk to a lot of these people who were starting. A lot of them were startup businesses, or wanting to get some handles on how to take their business further. But cash flow management is simply, you need to have enough. It's the inflow of cash, and then having enough cash available to meet your commitments, whatever those commitments are, whether they're loan payments, paying salaries, paying your suppliers, paying the rent, and most of all paying tax, which is often the thing that people forget about.
Paid mine today. The quarter.
Yeah, and it's not a lot of fun when that tax bill comes in. But this is the big issue, and I think the reason a lot of people struggle with it comes down to poor management. And a lot of businesses just seem to, they just take it as it comes. So that if there's money in the business account, they'll just take it out and to meet their expenses. So often there's no differentiation between what is business income and what is personal income. I think that's one of the observations. And then, of course, it's just the nature of business that there's the seasonal factors. There's the highs and lows of income.
Even like what we were talking about in the last segment, that a sale, and we see it in mortgage space.
That's the next one. So you don't get paid straight away. So again, you sell, but there is a delay, and that delay can be short or it can be long. So it's it can be all over the place, and it can result in a lot of problems if you don't manage it carefully.
So how do you overcome that?
Well, I mean, even just to sort of highlight some of those difficulties, really. I mean, look, the consequences are dire. If you don't have enough cash to pay your rent, what happens? You're kicked out of your premises.
Yeah. Well, even worse, if you're a director of a company and you're trading insolvent, that is, you don't have money to meet your bills. You actually don't have a business.
Absolutely.
And you can go to jail.
Yes, so it's really
Peter's
really
looking very
stuff.
surprised at that point.
Well, it's true. If you're trading insolvent, it's illegal. You need to be able to declare that. But the thing that I often find is people, and I've had a lot of these loans lately, Peter, where people have rung up a big tax debt and they don't have enough cash flow to pay tax. And it's really, really hard to get out of that situation when you get into it. We've been working with clients to do that, but it's very, very hard because the banks don't want to lend to you if you've got tax debt.
Yeah.
So this is a really, really important, very important topic.
Yeah.
I also think it's about keeping your eye on your business account. So what comes in, what needs to go out, so that you're not in that position. You also, in a sense, not just relying upon your accountant. I've actually got, 2 clients at the moment. Their accountant has died. No suspicious circumstances there. And however, what they've found out is he hasn't been doing their books. And they've each been hit with $25,000 tax that needs to be paid.
So you need to know.
You need to sit down with
even
your own professionals and say...
But don't people, and I think, mate, this is about what you're about to talk about, Rob, isn't it? About how to put, things in place to avoid...
Well, they did. They were actually paying $1,000 a week to him so that this wouldn't occur, but nobody can actually find out where that money's gone.
Instead of to the ATO...
Yeah, well, that's what he said to do.
Where you'd be paying it.
But when you're starting out, I mean, as I said, as my client said to me, he goes, I flip burgers for a living. I rely upon other people, in a sense, if they tell me this is how it's done, to do it that way.
I
think you've still got to... I think this is the key too, that you cannot... You take advice, but you have to know what's going on in your own business.
And
I suppose
have to take some responsibility,
that's my bit in terms of how do we deal with it? You do need to have a plan, and you can't totally outsource that. So go to people who can give you advice, but you need to have a plan. The two very, very important documents that you need to work on as a business owner, maybe with your accountant or whatever, is you need a budget and you need to have a cash flow projection schedule. there's a lot of those that can be downloaded. What's the government site? Money Works or whatever. Yeah, I think it's that one. So there's all those sorts of tools that are there, and just to fill that in to sort of work out the seasonal factors in your cash flow.
Yeah.
So you make sure that there's enough money there. So it's all about careful management of that, and there's a few key factors in it. Firstly, this is the most important thing that most people I spoke to in the TAFE course did not do. Pay yourself a salary. Pay yourself a salary. It's a big problem because people, and what happens, people are not differentiating between business cash and their own personal thing. The only way to do that is to budget, and you got to do your budget to work out what you can pay yourself. Pay it to yourself regularly. Live on that salary, and then if you have a good year, pay yourself a bonus. But that bonus should be managed very, very carefully before you release cash from the business into your personal account. What I see happening a lot is that people have money there, they're taking cash out of the business, but it's cash or income that they haven't paid tax on yet. And they're going to spend it before the tax bill comes in. So pay yourself a salary. Also, invoice without delay. So if you have a business where you do the work and then you get paid later, get the invoicing done. You need to have time set aside to do your invoicing or pay someone else to do it for you.
Tradies are renowned for this, aren't they?
Yeah, I get my house cleaned. I had an invoice from my cleaner the other day for May.
Yeah.
May, September, August and September. I didn't realise I hadn't paid her. So invoice. And also if someone does a job for you and you've got to pay for materials, get a 50% down payment first. That'll help your cash flow. And also follow up on late payments. All those sorts of things are part of the good cash flow management. Imagine the difference it could make to a business if you could change a 60-day wait, average 60-day wait between invoicing and when you get paid to 30 days. And it brings the income in 1 month earlier.
Yeah, because I also say to people,
difference.
look about invoicing in stages as well.
Yes,
so I have
payments.
a lot of event planners, and it might be a $20,000 wedding. Well, you know what? If they leave for their honeymoon, you ain't seeing that $20,000 for quite some time.
That's
so
exactly
I
right.
say, so in their trading terms, we actually put in at this stage this amount's due, so that the final payment, they're not left with 20 grand. It might be 2.
I think that's smart. It's a good way to do it if there's big payments like builders that have progress payments and so on. The other thing I'd say is set aside money for tax. Have a separate account for your GST and your tax because that's the thing that seems to catch most people out.
But I also think it's about people not knowing their structure. Like I had 2 directors of a gym come in, and I actually had to go and get the cookie jar out to explain to them that they couldn't put their hands in the cookie jar whenever they felt like it to draw money out.
Because the valuable point on that, to Rob's point earlier, is that if you're just taking $100 out of your business, but that $100 then has to have tax, super, everything apportioned to it.
Right.
So it's not the 100 that you've just taken.
That's exactly
It's more
right.
like 150.
But but if people are sole traders, that's where it gets. They don't have separate accounts.
But I think they need to.
Yeah, definitely.
And that'd
That's
be
the
my
first thing.
recommendation, even for sole traders.
Yeah.
Have your business account separate to your personal account, and do your budget. Work out what you can afford to pay yourself, and make sure that that you live
and
just
even
on
if
that
that
amount.
is only $100 a week, is what
if
you're
that's
drawing
all
as
the business is
salary, then
generating, that's
as a
all you
start
can
out or
pay.
whatever. But at least start those
Yep.
principles really early, so as
Yep.
you've got that well and truly understood. Because
Yep.
I mean, that's how I think that that's how I look at. As far as I'm concerned, I'm an employee of a business. I just happen to own that business.
I'm the same. The interesting thing having a business or an office manager who does all my books. She gets into me if I overspend. And she'll actually. I'm kind of
I've got one
accountable
of
to her in
those.
some ways.
Yeah.
And she'll wave the red flag, if the cash is getting low, and that's a good thing.
I had one
there's
of
a bit of
those,
accountability in that.
and now
Yeah.
I actually do more of that myself, and I found that my account manager was pretty tough on spending, but I'm tougher on myself.
Yeah, sure.
Which is interesting, which I didn't sort of expect.
That's good.
But but planning, budgeting
Yep.
they're definitely the big key
Yeah.
takeouts, aren't they?
And I think just to say here, I mean, my last point here is in relation to how a mortgage broker can help with these sorts of things. We can help with debt solutions, in terms of sometimes a loan is the way to to help people get out of the mess they're in, or to ensure that there's enough working capital. So it may be an overdraft facility. We can help with those sorts of things. And it may be that you use the overdraft for a bit of working capital. You keep it perhaps in your business as an emergency. I have an overdraft of $50,000. I don't think I've ever used it, but it's there as a backup.
Yeah.
And I think those sorts of things can be very useful. It may be a business loan if it is that you're buying a business or you're going to expand a business. You might want to use your own money, but the problem sometimes with using your own money is that you're depleting your resources, and it can actually create a cash flow shortage. Again, buying equipment. Often it's better to borrow rather than pay cash, so that you keep your cash available to help with your effective cash flow management. And when it comes to tax debt, I've been doing a lot of these lately. We can get lending for that. You'll find if you go direct to your bank, they won't be able to help you while you've got tax debt. We've got resources or lenders that we can go to that can help with that sort of thing. I know it's time to finish, but I had a big win for a client just recently, and I guess I want to make this point too. I think, and I really believe this, it's better to go to the broker than to go direct to the bank. And the reason is the broker represents you when we approach the bank. If you go to your banker, the banker's only representing the bank. We want to make sure the structure's right for you. The bank had tied these people up in knots. They were paying $12,500 a month in repayments, and the business was going under, and they'd racked up a massive tax debt. I was able to work out a way to get some funding. It wasn't a very good loan, but it got rid of the tax debt. They were able to then restructure with their bank. I looked after all that lending. I actually didn't get paid for it, but it was very, very satisfying. I was able to talk the language to the banker, get it all sorted out, and it's actually gone now, the repayments from $12,500 a month to $2,500 a month.
10 grand a month.
And what it's done is freed up cash flow so that now there's cash to pay tax and other commitments. And it's changed their life because they were going to lose their house.
That's awesome.
And, this is what we do. And so with these sorts of things, we can help. And I'd recommend talk to your broker first.
And he's going to put that in the awards next year.
Actually, yes, that's it. Thank you, Catherine. That's a good idea.
Great case study.
It is. It's very, very satisfying to pull that off.
So where can they, any of our listeners that might be thinking maybe you can help them out, where can they find you?
Give us a call on 4739-9749 or just type in my name, Rob Lees, and I think it will come up on a Google search.
Google's got you covered.
It has.
I think
from
you're
what I
probably
understand.
right.
Okay. Thank you.
Thanks, Rob.